Bitcoin breaks records. USD crashes. This isn't a coincidence. Are you paying attention? Because while most people were scrolling through social media and ignoring the financial world, something massive was happening. Bitcoin just quietly broke past $115,000, up more than 55% since its April 2025 bottom. At the exact same time, the US dollar recorded its worst start to a year since 1973, crashing almost 11% in just 6 months. That's not a coincidence. This chart divergence between Bitcoin and the US dollar isn't just noise. It's a message, a warning from the market. Something is breaking and Bitcoin knows. In this video, we're going to uncover what really drove this surge, why Bitcoin bottomed on April 9th and began a mysterious rally days later, and how politics, debt, and even Elon Musk played a hidden role in the biggest crypto comeback of the year. If you think Bitcoin is just reacting to hype, you're wrong. What you're seeing is the beginning of a macro shift, a moment where traditional financial systems are starting to crack. Bitcoin isn't just digital money anymore. It's a signal, a hedge, a lifeline. So stay with us, because what happened between April and July 2025 could change how you see not just crypto, but the future of money itself. Let's break it down one piece at a time. Bitcoin up, dollar down, a signal you can't ignore. Let's start with the basics. Since April 2025, Bitcoin has surged by over 55%, climbing from the depths of a bearish cycle to a new all-time high. On July 11th, it broke through $115,000, a number many believed was unreachable just months before. Now contrast that with the US dollar, which has had a brutal year. It's not just underperforming, it's collapsing. In just 6 months, the dollar index dropped nearly 11%, marking the worst start to a year since 1973. This kind of divergence, Bitcoin soaring while the dollar sinks, isn't random. It tells us something deeper is happening beneath the surface of markets. The old belief was that crypto only moved on hype, that it was speculative, driven by retail FOMO and memes. But this time, something has changed. Bitcoin is moving in sync with macroeconomic stress. It's acting like a hedge, a safe haven, not a gamble. And the more the dollar weakens, the more Bitcoin seems to gain strength. In 2025, this pattern has become too obvious to ignore. Investors aren't just buying Bitcoin for quick gains. They're escaping a fiat system they no longer trust. And this is just the beginning of the story. The April 9th mystery, when everything flipped. Let's rewind back to April 2025. Bitcoin had been falling for weeks, moving almost in a straight line down. Investors were spooked by talk of trade wars, government instability, and growing debt. Then came April 9th. On this day, something unusual happened. The US government announced a 90-day delay on proposed tariffs. At first glance, it seemed minor, but that same day Bitcoin hit its absolute bottom. It stopped falling, and just 11 days later, on April 20th, the rally quietly began. No news, no major headline, just a slow, steady climb. As if something had changed in the air, it was like Bitcoin knew something before anyone else did. That's the mystery. Why would a delay in tariffs spark a turnaround? Why would Bitcoin, supposedly driven by hype, bottom exactly when a bureaucratic announcement was made? These are the clues that tell us Bitcoin is no longer playing by the old rules. It's watching policy, it's reacting to debt. It's becoming a mirror reflecting what's really happening behind the curtain. April 9th wasn't just a random bottom, it was the start of a much larger shift in global sentiment, and Bitcoin was the first to feel it. No coincidence this was a policy response. At first, many assumed the rally was just temporary, but when Bitcoin kept climbing day after day, with no big news behind it, people started asking questions. Was this just market noise? Or was something deeper driving the move? Turns out, it was policy. The 90-day tariff delay wasn't just about trade. It was a signal. The government was backpedaling on tough moves, because the economy was weaker than they admitted. And investors saw that, Bitcoin saw it. This moment marked the beginning of a broader loss of trust. Not just in politics, but in the system. Every time governments showed weakness, every time they pushed debt higher, every time they blinked on fiscal responsibility, Bitcoin responded. It became a silent protest, a financial act of self-defense. No press conference announced it, no newspaper wrote it, but the market knew, and the charts recorded it like a heartbeat. April 9th wasn't just a policy adjustment. It was a moment of exposure where cracks in the system started to widen, and Bitcoin didn't wait for permission. It moved. Elon Musk and the first warning sign. Now let's jump to April 22nd, a date that, at first, seemed unrelated. That day, Elon Musk made headlines again. But this time, it wasn't about Dogecoin memes or Twitter antics. He publicly announced he was stepping away from Doge, citing blowback from Tesla's board and investors. It looked like just another Musk controversy, but something about the timing felt off. Why now? Why distance himself from a coin he championed for years just days after Bitcoin began its mysterious rally? Looking closer, it all starts to make sense. Elon stepping away from Doge was a signal, a subtle warning that something bigger was brewing, a silent admission that even the most powerful tech leaders were rethinking crypto narratives, because right after that announcement, Bitcoin's rally accelerated. This wasn't just random movement. It was cause and effect hiding in plain sight. Elon Musk, whether you love him or not, has a track record of shifting markets. And when he pivoted away from Doge, the market took notice. It marked a turning point. From meme coins to real assets, from noise to substance, from speculation to strategy, the fun and games were over. The macro storm was beginning, and for those paying attention, this was the moment when Bitcoin quietly became the serious play again. Elon versus Trump and the massive bill called OB. What followed next added fuel to the fire. Just weeks after Elon's announcement, a public feud erupted between Musk and Donald Trump. The headlines were loud, but behind the noise, something much more dangerous was happening. Trump was pushing a new piece of legislation, a massive economic package dubbed the Big Beautiful Bill, or OB for short. This bill promised investments, tax cuts, and stimulus, but at what cost? Economists warned, if passed, OB could add up to $5.5 trillion to the US national debt. Let that sink in. $5.5 trillion with a T. Bitcoin didn't miss that headline. While politicians argued and cable news buzzed, smart money started moving. They saw the writing on the wall. More debt, more inflation, more printing. And as the likelihood of OB passing increased, Bitcoin's climb turned into a charge. You see, Bitcoin understands something basic. Currency debasement equals crypto appreciation, and with trillions in new debt on the table, Bitcoin responded like a financial smoke alarm, loud, fast, and impossible to ignore. The market wasn't reacting emotionally, it was reacting logically, because every dollar added to the debt makes a dollar less valuable and makes Bitcoin more essential. The hidden timeline the market knew first. By now, Bitcoin wasn't just reacting, it was predicting. Let's walk through the key moments. June 22. Bitcoin falls to test $100,000 support. July 1. Odds of OB passing increase, market starts pricing it in. July 3. The US House passes OB. July 4. Trump signs it into law. July 11th. Bitcoin hits $115,000. They act, and this wasn't just retail investors chasing candles, it was institutions, hedge funds, and large players positioning early. They bought the dips at $80,000, $90,000, $100,000, and watched as the dominoes fell into place. Bitcoin didn't need a formal announcement, it only needed confirmation of direction, and once that came, the rally became inevitable. Bitcoin, the world's new macro signal. At this point, one thing became clear. Bitcoin wasn't just moving with the markets, it was leading them. Every major economic development, every signal of policy failure, every rise in debt, Bitcoin was already ahead. Think about this. Traditional markets wait for CPI prints, Fed meetings, earnings reports. But Bitcoin, it's real time. It's borderless. It reacts to confidence, not conference calls. That's what makes it different. In 2025, Bitcoin began acting like a macro barometer. When trust in the dollar fell, It rose when debt forecasts worsened. It surged when governments printed more money. It screamed warning signs. And this isn't a bug, it's a feature. Bitcoin was designed as a hedge against exactly what's happening now, and as central banks lose credibility, Bitcoin is gaining it. It's no longer about speculative gains. It's about preserving value in a system people no longer trust. In that sense, Bitcoin is acting like digital gold, only faster, leaner, and more transparent. And when the market needs a signal to interpret complex financial chaos, Bitcoin speaks first, losing trust in the dollar when money stops being money. Let's face a hard truth. The US dollar is still the world's reserve currency, but it's bleeding trust. With national debt surpassing $40 trillion, interest payments spiraling out of control, and inflation creeping back, people are beginning to ask, what is this dollar really worth? Because if money can be printed endlessly, is it still money? Or is it just credit with a time limit? Investors around the world are watching carefully. Countries are stockpiling gold. Central banks are exploring digital alternatives. But individuals are turning to Bitcoin. Why? Because Bitcoin is predictable. You know how many coins there will ever be. You can see every transaction on chain. You don't have to trust a politician. You just have to trust math. And in a world of fiscal manipulation, math is clarity. That's why the decline in dollar strength has coincided with a global interest in Bitcoin. It's not about getting rich. It's about getting out of a broken system before the rules change again. And when that kind of motivation spreads, it's not just a trend. It's a migration. Who knew first? Quiet buying at the bottom. Want to know who really understood what was happening? It wasn't the media. It wasn't the politicians. It was the smart money. While the world was distracted by headlines and drama, large players were buying quietly. They scooped up Bitcoin at $80,000, $90,000, and $100,000 with confidence, not because of hype, because of math, policy trends, and history. These are the same players who've seen this movie before. Debt grows, fiat weakens, assets priced in dollars inflate. It happened in 2008. It happened in year 2020, and it's happening again, just bigger. The market didn't hope Bitcoin would hit 115,000 USD. It planned it. It saw the trajectory, did the math, and positioned early. And when the OB passed, and the USD stumbled, and trust eroded further, Bitcoin surged exactly where they predicted. This isn't guessing. It's pattern recognition. And while most people wait for confirmation, the winners act during uncertainty. Bitcoin doesn't predict, it reacts faster than everyone. Here's something people get wrong about Bitcoin. They say it predicts the future. They treat it like some magical oracle. But the truth is far simpler and far smarter. Bitcoin doesn't predict. It reacts just faster than everyone else. Because Bitcoin isn't run by feelings. It's run by code. It's not controlled by speeches. It's controlled by belief. And when enough people with knowledge, capital, and courage see the same warning signs, Bitcoin doesn't need permission to move. That's why it surged before the OB bill passed. That's why it bottomed before the market noticed. That's why it reached $115,000 when most analysts were still stuck in bear market bias. Because the signal was clear. The system is under stress. Trust is eroding. And people are searching for a new foundation. Bitcoin isn't perfect. It's volatile. It's technical. But it's transparent. It's finite. It's immune to political spin. And in a world drowning in noise, that makes it powerful. So no, Bitcoin didn't see the future. It just read the present more clearly than the rest. Conclusion: the game is changing. Where do you stand? Let's zoom out. This isn't just about Bitcoin. This isn't even about crypto. This is about trust. About the systems we rely on to store value, plan for the future, and protect our freedom. When those systems begin to crack, when policies become politics, when money becomes a tool of manipulation, people look for alternatives. Not to hype a coin, but to highlight a shift, one that's accelerating. So ask yourself, are you watching from the sidelines? Or are you paying attention? Because the next chapter is already being written, and those who read between the lines are already turning the page. If this video gave you something to think about, consider subscribing, because the system isn't slowing down and neither are we.